So the primary focus is, for example, on EU and across GU. I mean, throughout all of the back testing and forward testing shit that I've gone through. I mean, let me even show. Okay, wait, no, let's not do it yet. Let me just go to the slide on Nasdaq. Um, I mean, even if we go from the 17th, or just some, let's just wait for it. Alright, cool. I found where it is now. So if you go and we do a full-out slideshow, this is just Nasdaq. It's what I'm primarily focused on. So you can see the 5th of March. So it's I identify this trade here on the 1 hour time frame. You can see that I'm looking at this 1 hour unfold fair value gap as well as this sell side here. And one thing I should also mark is I should mark this previous hourly low, and that will be explained just now. And I can get the laser pointer here. So in terms of this inefficiency here and this low, sorry, not everyone wants to drive fast because it's fucking Saturday. Just get up, nice and high. So you've got the sell side here called the previous day PM session sell side and the previous day settlement price. And you can see this is the 3 misses. Currently I'm bullish as I'm looking for full of the opening range, but not rushing into anything. And you've got price did make a BPR here and an inversion fair value gap here, but you do see it, we did trade past this high. So once we trade past this high, and for example, we went long here at this BPR, I fuck off, man. Yeah, so after price trades past this high here, it makes more sense for me to decide to rather close out your position, or not really close out, rather go to break even. And I'll explain it, and it can be seen here as well. Note here it says got no retracement, just shot up, no stress, patience is needed. After running this previous day PM session sell side, the Venom model, which ICT explained, was when you have an inefficiency as such, you see there's a small gap in there, but the third candle wicks but fails to close past it. That is a prerequisite, I believe, to like, okay, cool. So because we've had this formation here, whatever BPO that happens over here is, it's what's the word we have? It's like additional confluence, to say the least. So, anyways, here I opt to go. So I had a similar trade like this morning on VIX 25, where it makes these BPRs extremely quickly, but this, but however, in this example, you see that this high does get traded past, which does invalidate any initial return, meaning that in order for me to get long here, I need to see a propulsion block formed. You see a small BPR hoping to see prop block created, but I'm now in this trade because I'm eager to not get in it. And if this is a previous day settlement price, I should only really be looking for this, a consequent encroachment of that opening range gap. So you see, we do make this bullish propulsion block here, but note how you see this up close candle. You see how we're failing to close past that wick high. So that would have been the first indication of, the trade is not going to work. But again, if the loss was taken, the loss was taken. There's no shame in that. Um, and then you get this model here, um, propulsion block, and then it just absolutely shoots higher, right? So not my day here. In all honesty, the only possible trades that one could have taken would say maybe this propulsion block here, but if not, so be it. So then we go into the 10th. You see like the massive gap. It's now what a 4-day gap between these two trades. So on the 1 hour, I have this 1 hour unfold fair value gap. As it closes above this, I concerns a bullish change in the state of delivery, and that could be protecting Friday's 11 a.m. low from being traded through right now. But so it's this bullish change in the state of delivery here. Um, Again, all I should be doing is identify this 8 a.m. pre-market low, identify the previous week low and the Asian buy side liquidity, and wait for either of these points to get traded to, see if there's a buy model, partial out, stop loss to break even because then either the trade is going to run in my favor and I'm going to be profitable on it, or it's going to reverse and I'm gonna get screwed. There's no two ways about it. Um, so price trading through high of Sibian closing as it currently is gives me hope of the 3 minute using this as a bullish change instead of delivery and bullish repulsion block flip. This loss here was very steep. You'll see here. This up close candle had a massive, bottom wick when closing. So I don't even know why I wanted to go long there. It was just a completely forced trade. Granted that you've got this previous week low here still in the crosshairs, and let's see. So got to note how you did have this BPR formed here, and once this BPR gets formed and you get the pullback to the low end, that's your long position, that's your stop loss. And once price gets here, you close at 80%, you move that stop loss to break even, and you see, even if this is not only but two trades in a row of just 1 R, 1 R, that is 2 R. If funded account is large enough that you're doing 2% to 3%, granted on how good, I mean, maybe you pyramid um somewhere. But let's see, let's look at the losses. Let's just see, sell side quite clear. This one here was a typical, you see there, that break, third candle of this, because you got 1 and 2 SIBIs, these fair value gaps. This is the 2022 model. It gives you well, I don't really see the bearish breaker in all honesty. The breaker only when that high got taken, it was only these two. I guess this lowest down close candle, which happened. So it would have been this retracement up into that breaker. So it's almost a redistribution point as well as this fair value gap. And um, and an upside to, for example, a trade like this would be, although you don't want, because this is a SIBI, you don't want this high here to get traded to or close past, because um, these premium arrays are meant to keep prices lower. So once they get violated and they get close past, then you should believe it. There being a shift. For example, look at the small fair value gap, the SIBI that forms in this region. How, although there's a sort of wicks doing damage and a lot of fear mongering, it does, stay lower. For example, this SIBI here, keeps prices lower. Yeah, so this is that long where I made. Apparently, I considered this a bullish change in the state of delivery, although we had this massive bottom wick. Just wasn't really thinking straight. Focus on my models. Um, then there was this daily unfilled target. Mind you, right? Just think of this as the daily time frame. Here's your draw on liquidity, and so I'm looking for that draw. There's still the sell side in London though, and then news comes out. We trade up into that, and you see this massive, run up higher. prop block that formed here, I mean, it did cause some sort of selling off, but once you see that flip, once you notice that, then this becomes your propulsion block over here. I would have gotten out of any shorts. Yeah. So let's see. I'm really calling this a bullish breaker. You see now here how we sweep that high and we form this bearish propulsion block right here. Although that is a high. And you've got all the sell side resting. Even if you imagine here, you've got these smooth lows here. And yeah, you see how it just runs beautifully, even to previous day settlement price. And it all started with this propulsion block here. So even if you had initially gotten short here because you saw you saw this prop block form here, and you had your stop loss and you get stopped out, you can't say that you're throwing 100% of your um, available risk for the day on one trade. So even if you get stopped here, and that's okay, cool, you're not down 1R. This second entry here, or even here, if you allowed it to actually trade to its take profit, you would notice that um, it's, as long as you keep risk consistent across all these pairs, you're going to make, it's, the winners are gonna outweigh the losers. But it's that if that risk keeps shifting. So again here, I get this bullish propulsion block. An indication to stay out was the reluctancy for price to stay past. You see this up close candle, its wick high. We don't get that close, but I guess so be it. So stopped out here, um, and the 3 minute, you see this lovely sweep of an internal range high liquidity here, a bearish BPR, and it just absolutely runs lower magnificently. Then you get a bullish BPR here with the most recent high before the SIBI formed. That makes a nice one-to-one target. My name, I actually realized in hindsight, this me saying 9:30 to 11 a.m. strictly is not right. It should be from 8:30 to 11 o'clock. So basically, you've got the 8:30 window to 9:30. You see, what does price do? Does it offer you a model? If it does offer you a model, then congratulations, you can get in. But sometimes this you might find a ranging market and you don't get anything. So then you wait for the 9:30 because it's going to give you because you need 9:30 to complete the opening range gap. So once you have the opening range gap completed, um, you know, and then if there's no model there, then it's fine, because then you can also then look at, for example, 11:30 to 12:15, I believe, is that lunch macro. So there's usually some sort of reversal pattern there on the 1 minute, and if not, then there's the opening range in the PM session from 1:30 to 2 o'clock. And this part of all these people on TikTok take shittier trades than I do, but make so much more because they commit to one model and keep their risk the same. I do not do the same thing. I do not commit to one model and my risk always changes, and that's a big bummer. Um, Over here, you had again. You say, but look, but price makes this bullish BPR, or sorry, makes the inversion fair value gap, but then it takes out this high. This is what invalidates. Once the most recent high before this SIBI gets formed, once it gets traded to, I'm not really buying the buy model anymore, because I see that as we've now run our stops on everyone who was not profitable. So we should see some sort of reversal, and then that's what takes place. And I said that that's where this PP gets used, as it is an OB form, not a price respected as SIBI. Reason being is, so with the 2024 model, which is apparent, I believe here as well, of you make an inversion, then you make a propulsion block, and then you want to see price trade higher. It's you're using the grounds of inefficiency and order block, but you're using the grounds of a fair value gap and an order block. But obviously there's now SIBIs and there's BISIs, just meaning BISIs, or long story short, bullish fair value gap, SIBIs, or bearish fair value gaps. So if you then combine price first trades into a bearish fair value gap, then you get a bearish propulsion block, and that's a sell model. Or if you get to first trades into a bullish fair value gap, and then it makes a bullish order block, then that's your, say, that could be your two sets of confluences. But yeah, um, see if I can find an example. For example, here you just get a bullish change in the state of delivery here. That's it. I mean, like say, days of this where the market just runs higher, clears a high, then runs lower like this. Why would I demand and be like, oh no, there weren't any really good, great profits or whatever the fuck. Um, Example here, price sweeps these highs, makes a bearish breaker. So sorry, makes a bearish BPR. Why not go short here, right? Because then you got to ask yourself, are we like look at the highs and lows that so look at the highs. How significant was one, two, and three? Like these highs, is it the same significance as, for example, this high being swept and then price moving lower and forming this fair value gap, which causes a bearish market structure shift and all of that? Like it's all. I mean, everything that I can think about from all of these trades is that it makes sense when identify the lows, identify the highs, and wait for either of them to get traded to, and then look for the inverse. Trade like this here again, beautiful. 3 minute bearish change in state of delivery, inversion fair value gap, bearish propulsion block formed here. Return to the inversion fair value gap range EQ, which is so from this low to that high. You see that inversion. Its EQ gets traded to 1, 2, 3 times the quarter level is so this 25 quarter level is also being respected. It trades lower, you know, inversion here, goes back down, forms a bearish propulsion block with this candle's close, and you get the run lower. And this whole thing I said about so noting this immediate rebalance is why this doesn't get filled here. Reason being is because think of it, right? This fair value gap here is formed by 1, 2, and 3 candles, right? The middle candle made an inversion fair value gap here. So I know why this one doesn't get traded to, but sometimes you'd wonder, but surely this one here will get traded to. But mind you that this fair value gap is formed again by 1, 2, and 3. So note how price returns to the low of this candle here. If you see it just running low, you can see it here on the 1 hour, right? If you get one of these moves of it's running towards it. I mean, think of it. Why didn't you use these two up close candles and make a bearish order block here? Why did it make a bearish order block here? Why was it, would it have been so difficult for the market to have this down close candle close past this open and then start the sells? No. So why does it take place here? For example, here, like why do you, whenever price is just ranging, why do you see it struggled to make order blocks relative to that time frame. But the second it gets to these extreme premium and discount zones, then all of a sudden it's a lot easier for um, order blocks to form. So you get these two series of up close candles form, close trades up higher, then sells of extremely strong. Um, you know, Overall just great stuff. You see it here on the 1 hour. You see it over here, as well as these old wicks. But now note, you look at, if I look at the one now, we see here US US NAS 100 CFD, right? Look at not the swing low here, this one. So the immediate rebalance. So before price made this bearish BPR here on the 1 hour, there was a swing low here. Remember this now on the 1 hour. If you go to the E mini, remember before that BPR, look at this swing, right? You can see that swing there. Now you see how on after that BPR swing, bearish BPR swing, there's this trade high and there's now this wick over here. You go back to one, look at this wick. It doesn't trade lower here. Look at this wick. Whereas on the futures, it does. So this is also why I'm leaning more towards simply trading pound USD in London and then being a bit more hesitant with Nasdaq, especially because there's a CFD. It's not actually the futures contract, but um, you know, if all things go well by next year, I should be able to trade futures, which obviously means a change in location and all. Um, This gap left daily IFEG and confirmed, therefore, when the second sweep is formed, the breakaway gap is expected. All right, and so this was a daily inversion, and also because its close made an inversion. See over here, middle candle, so it doesn't get traded to. Markets move lower. Um, Then, so this was the thing about the sweeps regarding the 1 hour and saying that you note how for this is 11 to 12, if an 11 a.m. candle sweeps an 11 a.m. candle high and there's a BPR, it's not going to be although there is, you consider this a sweep. You see, and here it doesn't work. You would have gotten stopped out if you went short here. But whereas this one, for example, look at this high and this high. This high just takes it by 0.75 points. It forms a BPR, and that sell off ends up being profitable. And note these relative equal lows that get made over here. It generates this on purpose. People are seeing support. They're seeing this rally, seeing a pullback, here, and they're like, cool, they're going to be buying and putting the stops. Some idiot's going to buy here and leave their stop here. And then they're just going to let it go, and they'll leave it, let it go higher and higher and higher and higher. Then one last move against and this is actually like a Venom model because of the inefficiency before. This is a Venom model. I need to be in bed by 2:30 so I can sleep before work, man. I know. Let's see here. See how this breaker here works as well. This long-term low almost holds here. Breaker here forms in the 3, and you get those longs. With this, inefficiency keeps prices lower, and it sells. Say here, see how when price fails to clear lows and highs of previous hourly candles and present entry models, it's all over the place and price action isn't too clean. This is a clear example of even though the market is moving, I would not need to be participating as RR would be all over the place. Market at times provides a clear forward trade after sweeping old highs and lows and BPR, and it moves so well. 2 of those a week is enough. I don't need to be taking terrible trades, which is true. Again, here you see the hourly. Note how at 3 a.m. to 4 a.m., we're essentially staying within the range of the 2 a.m. candle. We fail to take the low here, and you run higher, and you make the inversion. Eventually, we run lower BPR. We don't get in. There's no model to buy here. We clear this high. Once you clear this high, long as it's practically invalid, and we wait again. 5 a.m. Clear. You see, so a day like this would be a perfect example of, oh, but why is it that my long positions, I'm not getting an entry? Well, maybe these longs aren't going to work well because the 3 a.m. 1 hour candle refused to move lower and sweep this hourly low before returning higher. So that's where maybe you see this inversion, wait for an OTE reversal, stop above there, and then you target it, which would have worked out well. Um, as well here, you see 67 over here. Clears the high, the BPR. If you take the short here and you lose, then boo hoo. Right, then you wait, 8 o'clock. What happens here again? You got that, 7 a.m. highs here, we run above it. Various change in the state of delivery occurs, as well as a breaker waiting to happen at this low. We form fair value gap, the most recent high before the highest high, sorry, the most recent low before the highest point of the market gets broken, 2022 model. And then you go 427 to this low down here is 360. That's 80. That's 87 points. If you're looking at the low of this inefficiency, that's a 100-point trade. This is not no dollar discount bullshit. Like, it's taken me so fucking long to study this stuff, and now it's taken me even longer to actually believe in it to execute. But not executing is fucking killing me because it's driving me insane in every other department of my life. I mean, you go to work and I'm just pissed off, and I'm pissed off for the sole reason of like I didn't say, for example, in the morning I had a 3 hour trade on pound USD, but I risked like 70 cents and I made, $2.10. And I sit there and I'm so pissed off, but I'm just there like, dude, it was a great fucking trade. But because of the risk element, because there's not enough behind it, like I should be okay with losing say 5 USD on a short like this and being like, cool, why am I not taking this BPO formation? Because we're sweeping, it's still an hourly, like we can't sweep the same high within the hourly candle because this is all of this is one hour candle. Whereas this here a previous hourly candle high and then we displace lower. Not indication of a new model sticking to what works for me. However, it shows me how to identify seeds much better and the importance of time. This has to be used along with the opening range gap and the new opening gaps. Okay, this is about how will I manage risk. Exactly. Now again here with like G, you see it as well. 8 to 9. We run this high. This whole move is false. Then look at this. Note how we just clear this high. The small inefficiency over here. Another Venom model. Trade up, bearish propulsion block. You go short there, stops above. And that's your 3.5 to 4 R once again. Now let's say you caught this trade and on Nasdaq you went long here and maybe you even closed out at this high and that's 2 odd and it's 4% in the week. What more does one need? 4% in a week has become so like we don't give it enough respect. If you've done 4% on a 400K funded account, that's $16,000. If you're doing an 80-20 split and you get to keep 12 and a half to 13,000 US dollars, it's 250,000 rand in a single week of trading. 250,000 rand in a week of trading. Damn, that would be so nice because literally then you just pay off your house a bit more, like, or if you're renting for a bit, pay rent for the next year, buy a fuckload of groceries, pay like your memberships and stuff off, and then you just lock in, and like all the money you get, you just keep stacking it, bro. You keep, reinvesting it. You get a credit card, you build good credit, you do all this right stuff. But yeah, but, it was good speaking to myself. Look, I know times are bleak. I know that. Oof, I'm way too fucking high in this bit. I know it seems like I'm kind of doing this alone because I am doing it alone, man. Like no one is going to, say, "Hey, man, that fair value gap, that's the one. Take it, execute. That's gonna be your baby. That's gonna be your beauty." No one is gonna say that for me. No one is gonna do it for me. I need to be the one to decide. Yesterday, and the message was, yeah, I saw this Nasdaq trade. It was a 1 minute BP off the clearing a previous 5 minute high, and it would have been around 3 or, and it was such a beautiful trade, but I didn't take it. It even kind of pulled back and gave me an option to take a very, very high risk to reward entry where if I risked $5, I would have made about 30 US, and a 6 or 6.5. It was bordering even 8 or, depending on how much I was willing to hold it. But I didn't execute on the trade, therefore I can't say that that it was going to be my trade. I can't, like, these ideas and these I should have, could have, would have. That's not money, bro. I should have is never gonna put peas in my bank. I can't believe I don't have eyebrows, dude. Look at my eyebrows. Literally have half things. But yeah, I'm almost there. I'm almost there. Fuck, this is taking forever. But Zali's gonna be so happy. I can't lie. Cause I'm gonna buy her a car this year. Trust. And I'll say it now. I Urinaka Shongwa. It's Saturday, the 12th of April at 1:24 p.m. GMT plus 2. I'm gonna buy the Zalia car before the end of the year, and then we're also gonna go on like a nice holiday, you know. Yeah. Let me end the stream here, but I do want to see if maybe there's a setup waiting for me at the next 4 hour candle. What was it made from? What fucking range bullshit was I caught in earlier then? So from where I wanted to go long, it's just kind of, it just dropped, cleared old lows, but it cleared Asian lows. Beautiful delivery to the upside. Looking at the next 4 hour candle, we could see it push up higher into that daily level. Just because, let me just share the screen here as well. So in terms of, what a shitty full screen display. So if you look at the 24-hour time frame, you've got this unfold fair value gap, and this is your draw on liquidity for the sole fact that we've made an inversion fair value gap of this here. So you can see how the day kind of started off false run up, was another false run up, then we came back down. So now, you know, that daily buy side is the draw. In terms of the 4 hour time frame, we're just looking to see if, you know, how are we going to be treating this SIBI here. If this 30-minute candle closes, you know, way above here, then you can treat this as an inversion and expect higher prices up into the buy side, especially, you know, since we've rejected off of this propulsion block twice. But this close here with this massive wick does indicate quite a bit of weakness. So, and judging by this daily inversion and then the behavior, I mean, we haven't even gone to the consequent encroachment. We could see ourselves trading to this into this fair value gap low here with the next before. So just basically repricing to more of a discount zone before you know, pushing higher into this buy side over here. So because that's the drawn liquidity. As well as looking at the 8 hour, I mean that's only gonna show at 6 p.m. my time, but that's still in 4.5 hours. So at 12 o'clock, yeah. So like so, you know, 12 o'clock New York time, as you will know. Yeah, good way of these things is just wait for it to wait for, like I said, like a 1 hour high or low. Once it does that, something is guaranteed. So at 2 a.m. we saw that this was technically a 1 hour bearish propulsion block which it made. So then these cells, although I kind of got in on this whole run up higher, it just came back down. And yeah, but they would have been nice longing, you know, opportunities there on the, I guess, the 3 minutes, 5 minutes, and so forth. Look over here, see this move here, say prop lock conversion, literally model 24 over here would have been fucking sensational. Then once you made these inversions, I mean, again, that's 3R. I was actually up a ridiculous amount. I was up like 1R over here, sorry, a 5R, because I was on the 5 minute, and then yeah, shit reversed on me. I was up literally 5R, That's the name of the game. I'm happy with the progress I've made. Um, I have faith in myself now. If I don't have faith in me, I'm fucked. If I don't do well over the next 2 weeks, I'm fucked for this month. Oh my days, that's something in my yeah. What's in my teeth, bro? It's fine, I'll just go brush them again. You can do it, Capro. You can fucking do it. You. Vamos, carajo. I'm so. I hope some of them one day is gonna see this shit and be like, this nigga was on drugs. And they're not wrong. I was. And I am.